We've been sold a myth that to be successful in business, you have to start from scratch. But what if I told you that the biggest and smartest entrepreneurs in the world, people like Elon Musk, Jeff Bezos, Mark Zuckerberg, and even Warren Buffett, don't build businesses from zero. They buy them. And that's exactly why the next generation of wealth builders, people like you, need to stop thinking like a startup founder and start thinking like an acquisition entrepreneur. In this video, I'm going to show you why the world's biggest companies are built through acquisition, how to spot the perfect business to buy without getting burned, why buying an existing business is the fastest, safest path to wealth, and how you can start doing this today, even if you're not a billionaire. So let's dive in. Chapter 1. Why the smartest entrepreneurs buy, not build. Let's break a common myth. Most people think that the biggest companies today, Google, Facebook, Tesla, were built from the ground up. But that's not the full story. The biggest businesses today weren't built. They were acquired. Google didn't create YouTube. They bought it for $1.65 billion. Facebook didn't invent Instagram or WhatsApp. They bought them for a combined $20 billion. Microsoft didn't build LinkedIn, GitHub, or Activation Blizzard. They acquired them for over $90 billion. Even Elon Musk, who we associate with building Tesla, didn't actually start Tesla. He acquired it, scaled it into a $1 trillion company. So the moral of the story? The fastest way to build wealth isn't struggling for years to build a company, it's buying something that's already working and making it better. Chapter 2. Why acquisition is a better wealth strategy than real estate, crypto, or stocks. When most people think about building wealth, they think of real estate. Well, it's great for holding wealth, but not for rapid growth. Stocks? Slow, compounding, limited control, and crypto, high risk, unstable, and speculative. But here's what the ultra wealthy know. Buying a business outperforms all of these. The average return on real estate is 8 to 12% per year. The S&P 500, 10% per year. Acquiring and scaling an e-commerce business, 50 to 300% ROI per year. Example, Alex Hermosi, a high-level entrepreneur, started by acquiring struggling gyms, scaling them and flipping them for millions, before moving into online businesses. So think about it. When you buy a business, you get immediate revenue. Instead of waiting for years for cash flow, you control your asset, unlike stocks or crypto. You can scale it aggressively and exit for 3 times to 6 times profits. At Trend Hijacking, we specialize in helping smart investors like you acquire cash-flowing e-commerce brands, scale them aggressively, and position them for a lucrative exit. Chapter 3. You don't need $1 billion to buy a business. Most people think buying a business is reserved for billionaires, Jeff Bezos, Elon Musk, private equity firms, but that's completely wrong. You don't need to be a billionaire to buy a business. With the right strategy and financial threshold, you can acquire a business for as little as $50,000, or if you're thinking bigger, up to $1 million. Here's the reality. For less than $100K, you can acquire a small but profitable e-commerce brand that already makes $5,000 to $10,000 per month in net profit. With $500,000 plus, you can buy an established brand with 6-figure yearly profits and a loyal customer base. With $1 million plus, you can buy a highly systematized, rapidly growing brand and scale it for a massive 3 times to 6 times exit. The goal is not just to buy a business, it's to build the systems that make it scale. And when done right, you can multiply your investment within 2 to 3 years and exit for a major payday. But here's the best part. You don't need to run the business yourself. With the right playbook, you can hire operators, automate workflows, and build an asset that grows while you focus on the bigger opportunities. So let me show you exactly what type of business you should buy. Chapter 4. What business should you buy? And why e-commerce wins every time. If you're serious about buying a business, the next big question is, what type of business should you buy? So let's break it down. SaaS, software businesses. High margins, but require constant innovation and developer teams. They're not beginner friendly. Service-based businesses, agencies, consulting, franchises. Cash flow positive, but highly dependent on human labor and client churn. Brick and mortar, traditional businesses. They're cash heavy, location dependent, and less scalable in the digital age. E-commerce, it wins every time. Why? Scalability. With the right marketing, you can 10 times revenue without increasing fixed costs. Automation and systems systems. You don't need physical locations or lots of employees. Leverage fulfillment centers, VAs, and AI-driven marketing. Asset building. A strong e-commerce brand appreciates in value, meaning your investment grows over time. Global reach. Unlike local businesses, you're not limited by geography. A single winning product can make millions in multiple markets. For example, a niche skincare brand that has an engaged customer base, repeat purchases, and influencer partnerships can scale 10 times faster than a service-based business and sell for 6 to 7 figures within a few years. This is why the smartest acquisition entrepreneurs are buying e-commerce brands. They don't require a physical presence, they can be automated, and they offer huge growth potential with low overheads. And at Trend Hijacking, we specialize in finding, acquiring, and scaling these exact types of businesses, so you can get in the game with confidence. Chapter 5, the 3-step wealth formula: buy, scale, exit. So, now you know why acquisition is the future of entrepreneurship and why e-commerce beats everything else. But let's talk about execution. How do you turn a small e-commerce acquisition into a massive payday? Well, you follow the 3-step wealth formula. 1. Buy smart. The right business, the right price. Look for strong branding and recurring revenue, not just one-off viral products. Avoid businesses reliant on one traffic source, like Facebook ads alone. It's dangerous. Check operations. Can the business run without heavy daily involvement? Negotiate the deal structure. Use seller financing, investor partnerships, or SBA loans to minimize upfront capital. For example, you find a Shopify brand making $300,000 per year with 30% margins, $90K profit. Instead of paying $210K in cash, you negotiate 50% seller financing and use a loan to cover the rest. Now you have a business with an immediate cash flow and massive upside. 2. Scale fast. Build systems and automate growth. First, create standard operating procedures, SOPs. This means defining how orders are processed, how customer service is handled, and how marketing is executed, so the business runs like a machine. Outsource and delegate. Use VAs, agencies, and automation tools to eliminate busy work and focus on strategy. Expand revenue streams. Add subscriptions, high-ticket upsells, influencer partnerships, and retail expansion to increase customer lifetime revenue. Optimize paid and organic marketing. Run Google ads, influencer collaborations, and retargeting campaigns to drive exponential growth. For example, an e-commerce brand doing $30,000 a month in revenue with 10% email revenue, we implement a full email marketing strategy, increase retention, and double revenue in 90 days without spending more on ads. This is how acquisition entrepreneurs build wealth at scale. Instead of chasing customers, we focus on maximizing every dollar from an existing customer base. 3. Exit strategically. Sell for 3 times to 6 times profit. Know your exit strategy from day one. Are you selling to private equity, aggregators, or individual buyers? Optimize your financials. Buyers want businesses with clean bucks, stable growth, and recurring revenue. Negotiate the best multiple. A brand with strong retention and organic traffic can sell to 4 to 6 times profits instead of the usual 2 to 3 times. For example, a business making $500,000 per year in revenue, $150K profit, sells for $600,000 to $1 million depending on branding, traffic diversification, and operational efficiency. With the right playbook, you can double your exit value in 12 to 24 months. At Trend Hijacking, we help investors not just buy businesses, but structure them for a massive exit. We build SOPs, hire operators, scale revenue, and position businesses for top dollar acquisitions. Entrepreneurs of the future won't build from scratch. They'll buy, scale, and exit for 3 to 5 times multiples. If you're serious about business acquisition, click the link below. Whether you're looking to buy your first e-commerce business or scale one for a major exit, Trend Hijacking can help make it happen. Like, comment, subscribe for more expert insights, and I'll see you in the next video.